You are listening to the Manument Podcast. My name is Casey, and I'm here with my buddy Glenn Johnson, investment advisor and founder of Jabez Financial right here in the Uncasville area. In every episode, he is here to break down today's biggest retirement worries and headlines for us. We're going to chat about de-risking your portfolio as you get closer to retirement, plus a new debate that Dave Ramsey has stirred up. But before we get to all of it, if you've got questions about your current retirement plan, or you just don't even have a clue where you should start, this is your chance. Glenn has set aside 5 spots on his calendar for a complimentary introductory conversation exclusively for our radio listeners this week. 860-288-9977 is what you need to dial to claim your spot. Glenn, can you kind of give us a quick overview of what this first meeting looks like? What can folks expect when they come in and they sit down with you?
Well, I definitely want to invite people to take advantage of having the opportunity to sit down and have a conversation, because not only do we get to revisit your backstory and how you got to where you are, but also some of those things, some of those red flags will jump out and things that need to get taken care of before year end. Kind of like required minimum distributions. A lot of times, because at the end of the day, it's really on you to make sure you've taken your RMD. And a lot of times financial advisors, that's something they miss. So it's good to be intentional about looking at it. Year end's coming up. Do we want to take do we need to take an RMD? Do we want to do some Roth conversions? Or some sort of tax loss harvesting within the investments in the portfolios. So when we think about getting together and having a conversation about this, it's a good time to kind of wrap up the year to make sure we finish strong.
And just to be clear, there's no cost. There is no obligation to this meeting. It is simply a chance to talk through your goals and get a professional perspective. Glenn's office is right here in Uncasville. He's just down the street from Mohegan Sun. So give us a call, 860-288-9977. We are standing by right now to take your call and get you on Glenn's calendar. That number one more time, 860-288-9977. Or you can always connect with us online. We are at jabezfinancial.com. And that's Jabez, Jabez. All right, Glenn, let's get into it. The end of the year is going to be here before we know it. And the city of Pittsburgh actually put up its downtown Christmas tree a few weeks ago, even before Halloween was here. It's kind of a logistical thing, they say, because it's got to be put up before they can assemble the surrounding temporary ice rink that they have up for the holidays. But in any case, Glenn, this is just another reminder about the end of the year approaching very fast. So I wanted to ask you, what items should we be ticking off during our review with you before the new year sets in?
Well, it's good to have a basic checklist. Like, what are the things that are applicable to you in your situation? So, like we were talking about with required minimum distributions, have you calculated it? Has the adequate amount of withdrawals been made this year? Otherwise, there's a huge tax penalty if you miss it. Another thing that we want to look at to check off at the end of the year is the Roth conversions. Is there an opportunity to convert some of those traditional IRA dollars to Roth dollars so that they can continue growing, not just tax deferred, but tax free? We want to be able to capitalize on that. Or are there some after-tax investment accounts where we can evaluate them and say, is there an opportunity for tax loss harvesting? That means, is there a loss? Is there a particular holding within your portfolio that's gone down in value that if you sold it, you would be able to realize a capital loss? At the same time, that could be offset by selling something that has a gain. So there's trades that need to take place within after-tax accounts that will overall decrease the tax liability. And that's something that needs to get done before December 31st. Another thing that we'd like to talk about in year end is gifting. Is there some charity, some charitable gifting that you want to participate in? It's interesting, Casey, that Americans are the most charitable country in the world. I mean, the United States is constantly donating here and donating there. In fact, we donate so much, we do it to a fault. And the reason why I say we do it to a fault is because the United States, as a culture, we give more than we can afford. Think about it. The federal government has $5 trillion worth of income, and they have $7 trillion worth of expenses, and we're still being charitable. Now, obviously, we can't run our households like that. Only the government can do that.
Right.
I jokingly say only the government can make money. The rest of us have to earn it. you know, they
Yeah.
so we want to think about is, are there some opportunities for gifting with IRA money? Once you're 70 and a half, you can make charitable donations directly out of your IRA and not have to pay any income tax on it. And we can do that up to like $108,000 a year. So if there is gifting that people want to do, we can talk about how to do it tax-free.
A lot of things to discuss in a meeting with you. And let me ask you this, Glenn, because I know existing clients fill a lot of those December calendar slots up. So if somebody is new, when should they make an appointment to have that first conversation with you?
The sooner the better. It really is. The longer you delay something, the more complicated it becomes. So if you have the thought that, maybe I could have a conversation about this, I wouldn't wait. I would just pick up the phone, get on the calendar, give us a call at 860-288-9977, and pick a time to come in and have a conversation. We don't have to make all the most significant decisions in the world right away, but it would be a good idea to have a conversation and get a clue as to what opportunities are out there for you.
And I just want to remind you too, Glenn is local. He is right here in Uncasville. He would love to sit down with you in his office. So give us a call. Let's get you on the calendar for that introductory conversation. That number for you again, it's 860-288-9977. Go ahead, claim your spot while we've still got them. That number one more time, 860-288-9977. Or you can always visit us at jabezfinancial.com and you can get connected with us that way. All right, Glenn, there are a lot of studies that talk about when people hope to retire versus when they actually do. I want to play you this clip from the Wall Street Journal's Ann Tergeson recently on Morningstar. Take a listen.
And over time, I just started noticing like everybody says they want to retire later than they do on average. People want to retire at, say, 65, 66, but they really are retiring more like 63. And often, people speak to these unexpected things that happen, whether it's layoffs, often it's health issues, whether it's their own health or somebody else's health, and they need to provide caregiving. So I think that's just a very, very persistent, common trend over time.
So my question for you, Glenn, is how do you design a retirement plan that builds for longevity but is flexible enough to handle the surprises that life tends to throw our way sometimes?
Well, you need to know what needs to be in place first. Like what do you need to be financially independent? And it's not just having enough assets, it's having a system that's going to work. And there's so much talk about when I want to retire versus when people actually retire. And it's really interesting. Sometimes the people that plan on working forever retire early. And the people that plan on retiring early end up having to work longer. It rarely works out exactly as you anticipate. But when we're responsibly building the right system and building the right assets with the right tools to have it in place, whenever the time comes when we do pull the trigger to retire, we're able to do so. And that's what becomes important, because as we navigate building the assets and constructing the right financial system for us, it's kind of like building a house. And there is that foundation that's got to get laid first. But even before you can break ground, there's so much prep work that needs to get done. Right now, my wife and I are putting in and they call it an endless pool in our backyard, right? And there's so much work that has to go involved because we've got huge boulders that we've been having to dig out in between them. But before we could even get started, there was like 7 permits that we had to go through. We had to get approval. No, they don't. It's like we had to get approval from zoning and Wetlands Commission and the building permit and the pool permit and the electrical permit. We had to get approval from the Uncas Health Department. We had to do the call before you dig. We had to there's all these different things that need to get done before you could even start. Yeah. And this is just putting in a little pool. When we talk about building a financial system that's going to financially support us throughout retirement, we don't just have to take care of the legalities and make sure we're doing things correctly and doing things in the right order, but there's a lot more planning that needs to go into it. But when we get our plans in place, then we can advance confidently knowing that we have a system that's going to work.
That's a really eye-opening comparison, Glenn. And to me, flexibility sounds great in theory, but what does that actually look like in a retirement plan? Are there any specific tools or strategies that allow people to pivot when life throws them a surprise like we were talking about?
Yes. And so let's start with the foundation, which is everything is built on, right? What that is it's not that people need millions of dollars to retire. What they need is cash flow. They need to have more money coming in than going out on a monthly basis that they can count on for the rest of their life. So let's start with that foundation of establishing what assets and what investment vehicles do we need that will generate enough cash flow for us to live on. Start there. There's your foundation, because you know what? You'll always need income no matter how long you live. So let's establish the cash flow needs. And then afterward, once our cash flow needs are met, then we can look at some of the other opportunities, like, well, is there a slush fund for vacations? Is there a slush fund for gifting? Is there, what other types of vehicles, investment accounts should we use for different types of things? But let's lay the foundation and make sure you have enough income so you never have to worry or be concerned about enough money coming in to meet your expenses.
Well, I've said it once. I'll say it a million more times. Retirement, it's not a one-size-fits-all kind of deal, and your plan should not be either. There are life changes, the market shifts, and your needs evolve over time. And Glenn can help you build a plan that adjusts with you and help you stay prepared for whatever comes your way on your retirement journey. 860-288-9977 is how you reach us. We'll find you a spot on the calendar to sit down with Glenn for your complimentary introductory meeting. 860-288-9977 is that number for you again. We are standing by right now to take your call. Or if online's better for you, you can always head to jabezfinancial.com. And there it's got all the ways that you can get connected with us. All right, now, Glenn, we just passed the 96th anniversary of the 1929 stock market crash that helped usher in the Great Depression. And CNBC and New York Times financial reporter Andrew Roth Sorkin has come out with a new book about that time. It's called 1929. And he tells 60 Minutes that the market run-up we've seen lately mirrors the overpriced bubble of 1929. Take a listen.
I would argue to you that the economy is being propped up almost artificially by the artificial intelligence boom. There are hundreds of billions of dollars that are being invested today in artificial intelligence. This is either a gold rush or a sugar rush, and we probably won't know for a couple of years which one it is. We will have a crash. I just can't tell you when, and I can't tell you how deep. But I can assure you, unfortunately, I wish I wasn't saying this, we will have a crash.
So, Glenn, have you seen clients nearing retirement come in with too much market risk in their portfolio? And what's a way to reduce that without sacrificing too much growth?
Well, I can tell you right now, it's really, really rare when someone comes into the office and they don't have too much market risk exposure right now. It's across the board because the writing is on the wall. We're in a major bubble. And when he talks about is the AI boom, is this a gold rush or a sugar rush? Well, there's no question that AI isn't going anywhere. It's definitely changing the whole financial landscape. It's not going away, and it's only going to increase in effectiveness. Kind of like the internet. When that came out, it was never going away. But that doesn't mean there wasn't a dot-com bubble. So just like we had a dot-com bubble, we have an AI bubble. So I definitely wouldn't make any kind of claim to say that, well, AI is just a fad. It's not. This is sticking around and it's not going away. And we've got to learn how to live with it, use it, and not let it have control and authority over us. That said, when I see somebody come in with a portfolio that they've rode this huge tech wave, primarily driven by the Magnificent Seven, they've got a tremendous amount of overexposure, similarly as they did in the dot-com bubble. And just like no one could choose the date as to when the dot-com bubble was going to burst, no one's able to put their finger on when this AI bubble is going to pop. But it has to. It's just not sustainable. So how do you avoid that? Well, rebalancing for one. So for the people that have a portion of their assets that are in the market? Are you rebalancing along the way? Are you selling as things go up, and are you buying in asset classes that are at a low? Are you maintaining your intended level of risk exposure? And that's what's gotten so far out of whack. People haven't rebalanced their portfolios, and they don't necessarily have the right types of assets in there. Are they positioned so that they can profit when it does burst? Are they going to make money when the market does go down? And these are some of the things we like to look at. It's not just let's ride this wave and hopefully get off at the top. It's sure, experience the growth, but go about it responsibly.
Absolutely. If you are approaching retirement and you're still carrying a lot of market risk, maybe it's time to take a closer look at your portfolio. Let Glenn be that second set of eyes for you. He can help you understand where you stand and what adjustments might make sense for your specific situation. This is what an introductory conversation with him is all about. It's a complimentary consultation to help you build a plan that is balanced, flexible, and built to last. So give us a call, 860-288-9977. We'll find you the next convenient time on the calendar. That number again, 860-288-9977. We've got our Jabez Financial teammates standing by at the office right now to help you out, or you can always visit jabezfinancial.com and we can get connected that way. All right, Glenn, Dave Ramsey has stirred up another debate recently. He says that you should take your Social Security at 62, even if you're working, as long as you have the discipline to invest it wisely. So I wanted to see what you think of that, Glenn. Do you find that most of the people who come to you have the knowledge and the discipline to do that?
I worked with Dave Ramsey and his team for a little over a year, not too long ago. And he has, he's done exceptionally well sharing a lot of common sense. And there's oftentimes we can get into an environment that says, okay, this is what everybody should do. And generally speaking, that can work out well. For example, when he talks about his 4 different types of asset classes that he likes to invest in. And over the long run, yes, that works well. Or he also talks about saving 12 to 15% of all that you make. And then if you do that from the day you start working, by the time you're in your 60s, you'll be able to retire with significant wealth and be fine. And that's all completely true, as long as nothing bad happens. Once you throw a divorce into the mix, or a kid that's strung out on drugs, or lawsuits, or physical injury, that can throw off the whole plan. And so we need to be able to do something differently. So when you say across the board, people should just take their income at 62 and invest it, even if they have to pay the taxes on it, take the income now, invest the money, put it into maybe he's talking about putting it into the S&P 500 because that does really well over time. Well, the timing on that may be horrible. Right now, we have a price per earnings ratio that's off the chart, a tremendous federal deficit, and we're in a everything bubble. So for people who are taking Social Security right now with the idea of, okay, I'm going to take this money now, invest it into the market when it's at its peak, even after paying taxes on it. Right now, if you don't have to take it, chances are it's a bad idea in this season. So it's almost like, remember in 2008, or leading up to 2008, there was a lot of people talking about how they should borrow money, take a home equity loan, and buy an investment property. Real estate was booming. You could borrow money at a decent interest rate and invest it into real estate and ride this bubble up. But then it all collapsed. It worked really well until it didn't. And this is where if somebody starts to taking their Social Security early, and with the idea of just putting it in a stock market portfolio, well, really what they're doing, it's kind of like they're borrowing from themselves to make an investment now. I mean, not technically, but what people are giving up is the guaranteed growth that they would be getting from that future Social Security payment. So I don't think right now it's a really good time to be doing that. This is why I would invite you to give us a call at 860-288-9977 and find out, is this the right idea for you in your circumstances? And this is where it's when we jokingly say or frequently say everybody's situation is different. I can't tell you how true that is. In fact, I've sat down with people on paper. They have identical financial situations, and what's right for one person would be a horrible mistake for the next. It really is a custom plan. You think about building your retirement, it's like building your own custom house. You've got your designs, you've got your plans, and you're going to run into some obstacles along the way, but it's best if you have somebody that's been through this enough times, knows what to watch out for, what to look for, so that when you're building this custom home, your dream home of retirement, your financial plan that you're going to thoroughly enjoy living the rest of your life, you want to go through that construction with somebody who's got experience and somebody who has seen the wins and the losses of what other people have experienced. So I invite you to give me a call at 860-288-9977. And I'd like to find out what your financial dream home would look like so we can put together a plan and make it happen.
If you are ready to talk through your retirement plan, Glenn is ready too. We've got our Jabez teammates standing by at the office right now, ready to find you that next convenient time on the calendar. You've just got to be the one to make that call. 860-288-9977. Glenn will do this first meeting completely complimentary. There's no strings attached, so take advantage while we've got these spots available. That number for you again, 860-288-9977, or you can always visit us at jabezfinancial.com. That's Jabez, Jabez, and you can get connected with us that way. All right, Glenn, we know that oftentimes wives outlive their husbands. In fact, research shows that nearly 80% of women will become the sole financial decision maker for their household, and that includes planning for their retirement as well. So I wanted to ask you about this, Glenn. Do you take the time to make sure that both spouses are on the same page when you meet with them so that neither one feels lost in their retirement planning?
Absolutely. No question. It's really about, I'll tell you that there's so much security that comes from knowing that your surviving spouse is going to be totally fine should you die prematurely or first. And I find that concern very prevalent in men because they've assumed the responsibility, especially when a man has assumed responsibility for his family financially, and he's accumulated the wealth necessary to be able to live a comfortable retirement. They want to continue enjoying the wealth that they've created, but it's hard to enjoy it if you think, should something bad happen to me, will my wife be okay? And also knowing that would come at a time when he wouldn't be around to help. So this is where that support system comes into play. And like you said, 80% of the time when a husband passes away, the surviving spouse, the wife, within a year, 80% of the time, they're working with a new financial advisor because maybe their financial advisor connected well with their husband. Maybe they did a really good job. They put together a great plan, but the wife is disconnected. And I'll tell you, I've been doing this for 25 years, and there hasn't been, and I've had a lot of clients pass away over the years, and never once have I had a client pass away and I still wasn't there continuing to work with their surviving spouse. It's never happened.
Wow.
That's because here's the thing, I value the marriage more than the money. I care more about people than their assets. But by caring enough about people to connect with them, should their husband pass away, at least they're doing so in such confidence that their wife will be totally fine and well cared for, and they understand how things will continue to meet their needs.
Well, that is quite the testimony to you, Glenn. You want to make sure that both partners feel heard, they feel understood, and they're confident in what their plan is. And it's critical that both people know where they stand and what that plan looks like going forward should something happen. And Glenn is helping couples in his office every single day get to this place of confidence where their retirement strategy reflects both sets of priorities. It's never too late to start these conversations. 860-288-9977 is how you get in touch with us. You can sit down with Glenn. He is local. He's right here in Uncasville, and he has set aside time to sit down with you for that complimentary introductory conversation. Those first 5 callers can claim a spot on his calendar. So again, that number, 860-288-9977. 9977, or find us online at jabezfinancial.com. All right, before we go today, Glenn, I like to talk a little sports with you when I can, and our listeners may not be familiar with the name Amari DiMercato unless they're a fan of the Arizona Cardinals, but he has become infamous for a touchdown that he should have scored several weeks ago, but he lost focus. He dropped the ball as he crossed the goal line, and CBS Sports called the action, or should we say inaction? Take a listen.
DiMercato off to the races. Touchdown. A 72-yard sprint. He may have dropped the ball. Did he drop it early? You see him kind of put it on his fingertips, but did he have control before that thing broke the planes?
Ruling on the field of a touchdown is under review.
So the Tennessee Titans actually ended up getting the ball back, and they came back and they won the game. Heartbreaking for this man, but I was thinking about this, Glenn, from a retirement perspective, and fumbles can also happen when you're about to retire. So talk to us about how you can help your clients maintain their focus all the way past that goal line.
You know, it's this is where we have the opportunity to learn from somebody else's mistake. You know, I'm sure that football player is never going to forget that, and he's never going to forget the lesson that he learned from it.
Feel sorry for him.
And he'll never drop the ball again running across the line. Right. And so it's kind of like he's learning the hard way, right? But we have the opportunity to learn something from that ourselves so that we can avoid it. And it's not just learning from other people's failures, but we want to learn from other people's successes. And sports it's such a great illustration of how all of that can work, because in sports, you know exactly where the end line is. You know exactly where the goal is. You know exactly what's needed to get there. And it's so clearly defined. It's spelled out for us. This is what you need to win. You need so many points. You need to cross the line, score the goal, put it in the net, or whatever it is that's necessary. You know what needs to get done. But financially, it's far more ambiguous. It's harder to define exactly what that goal is, and it's ever changing. So where do you even begin with establishing what those goals are? Well, I like to start with this: financial sustainability. Do we have what's in place? Do we have the systems in place so that we will be able to sustain ourselves financially, and then build off of that? And don't lose focus. Don't lose focus on, I'm going to achieve financial sustainability. And when we have that kind of focus, then we can handle the bumps and the bumps along the way. You know, I remember when I was growing up, my sister, who's a gymnastics coach, was teaching me how to stand on one foot, you know, how to have balance standing on one foot. And it's a matter of choosing a point on the ground to focus on that's at a 45-degree angle from your eyes. So if you stand on one foot, look down at the ground at a 45-degree angle and picture like you're being anchored, right? All of a sudden, when somebody can actually knock into your shoulders a little bit, but as long as you maintain that focus, you can still stand. That's why, even though I'm not a physically flexible person by any stretch, right, I can still stand on one foot, put on a shoe, and tie my sneaker without falling over, because I know how to focus. And so we want to be able to have that financial plan remain focused so that we don't get overconfident and distracted like that football player. But he was overconfident, and that's what got distracted. And recognizing that actually it's actually Satan's primary objective is broken focus. If he can break your focus, he can knock you off track. So let's stay focused on what we're looking to accomplish, and then we'll be able to handle the bumps along the way.
Thank you so much for listening to this episode of the Manument Podcast. Make sure you subscribe wherever you get your favorite podcasts so that you never miss an episode, and we will see you next time. Take care.
Investment advisory services offered through Jabez Financial, LLC, a registered investment advisor firm. Registration is not an endorsement by securities regulators. By contacting us, you may be provided with information about insurance products, including annuities, offered through Glenn Johnson, Connecticut Insurance, license number 4628409. The firms are separate entities. Annuity guarantees rely on the financial strength and claims-paying ability of the issuing insurance company and are not offered by Jabez Financial, LLC. Read your contract for restrictions, limitations, or penalties. Jabez Financial, LLC is not licensed in all 50 states. To find out if Jabez Financial, LLC is licensed in your state, please call 860-390-0093.